Coming up, from sales to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio in New York. Good afternoon to our audience on Bloomberg Radio and on YouTube. It's Bloomberg Business Week on this Jobs Day, Friday, September 3rd, 2021. I'm Tim Stenovic. Carol Masser is off today, and joining me in her place is Bloomberg News cross-asset reporter, also my Quick Take co-host, Katie Greifeld. Katie, happy Jobs Day.
Happy Jobs Day,
Well,
Tim.
is it happy?
What a Jobs Day it was. Yeah, it's hard to get a read on it, honestly.
It is. Those numbers, though, not looking good. 235,000 jobs returned in August versus survey expectations of 733,000. Serious implications for tapering, serious implications for the economy, but at the same time, it does seem like the market is kind of shrugging it off.
Absolutely. I mean, part of that is that there's not a lot of people around to trade it. I mean, trading volumes right now in the S&P 500 are about 20% lower than the 30-day average. Not a lot of people at their desks right now.
Friday before holiday weekend, that kind of makes sense. Well, we are going to talk all about that and more with Bethany Frankowitz, the president of Manpower Group. Also on today's show, taxing stock buybacks. Some Senate Democrats want to do it. We're also going to get an update from Seattle's Capitol Hill. And we're talking the latest on the pandemic. We're talking crypto with the CEO of Kraken Bank. And we're going to round out the show talking the U.S. Open with Sports Illustrated's John Wertheim. All that and more coming up in the next 3 hours. In the meantime, let's get a check on the trading day with Charlie Pellet.
Hi, thank you very much. And here's what's going on. Got to begin with crypto. We've got Bitcoin back above 50,000, 50,395 right now. S&P is at record. We've got NASDAQ all also at a record. NASDAQ 100 index up now by 0.3%. NASDAQ Composite Index up 0.2%. S&P little changed in the green, up now by just about 2 points, but very interesting, keeping an eye on a spread, the spread between the NASDAQ Composite Index and the S&P in the year-to-date column. So far this year, NASDAQ up 19.1%, S&P now up by 20.8%. By comparison, the Dow this year up by 15.6%. Right now, Dow Industrials lower by 0.1%, down 36 points, but to be clear, both the S&P and NASDAQ are at records. 10-year down 11.30 seconds, 10-year yield 1.32%, spot gold up 1.2%, 18.30 the ounce, and West Texas Intermediate crude down 0.9%, 69.35 a barrel. Briefly after earnings, Broadcom up 1.3%, HP Enterprise, Hewlett-Packard Enterprise up by 1.1%, MongoDB is surging now, up by 25.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get to the Market Drivers Report. And joining us now live in the Bloomberg Interactive Brokers studio is Kriti Gupta. She's Markets Live reporter for Bloomberg News. Also joining us is Reed Pickert, U.S. economy reporter for Bloomberg News, on the phone from Washington, D.C. Kriti, I want to start with you. Take us into today's trade and really how investors are reacting, not just when it comes to the equity market, but also the bond market, to today's jobs report.
Yeah, well, it was a mixed picture early on. You started pre-market trading pretty solid in the green. A lot of people saying, well, this payrolls report's going to be good because the last two payrolls reports were pretty big upside surprises.
They were wrong.
Man, they were wrong, yeah. And so immediately you saw a pretty strong reaction. But what's interesting to me was that in the first about 5 minutes of that trade, the fluctuations in the market were going in both directions. And it was because we weren't clear, and when I say we, I mean traders were not clear about whether a good economic surprise or a bad economic surprise in this reality is actually good for the markets or not, because it used to be great for the markets. It meant the Fed wouldn't be hand-holding, or would continue to be hand-holding the market, continuing that Fed support. But now we're talking about like this tapering tantrum or tapering idea kind of happening by the end of the year. So that dynamic has completely flipped. And you did see a little bit of risk aversion, but it kind of seems like some of those stocks are coming back now. A lot of this is big tech driven. So some of those havens are in play. But remember, it's hard to tell because we are down in volume, 23% lower on the average volume being traded. So, and it's anyone's guess how this is really processed after Labor Day weekend.
So the reaction that we're seeing today, you're saying, is not necessarily the reaction because volume is so low?
Absolutely. And simply just that the drop wasn't so low, right? Like negative means negative in the markets, but then it came right roaring back. So that's not an immediate bad news.
And Reed, I want to get your take on this because every analyst and investor I've talked to today says that this pushes back the Fed's taper timeline, that basically a September announcement is off the table. But is that what you're hearing as well from the economists that I know you speak to?
That's what I'm hearing as well. I mean, this report was bad across the board. I mean, when you're expecting a 733,000 type number and you get 235,000, that really drives home the Fed's message of being data dependent on these employment reports. But what I find really interesting is take September off the table, move to the November meeting. When we think about the timing of when the November meeting is, it's actually going to come just a few days before another jobs report. So even though that meeting will be the first week of November, they'll still only have one more jobs report to look at, and that will be the September report.
So does that say what do analysts say about expectations, given that they're not going to have as much data as potentially they would if the timing were different?
You know, I don't know, but I think, at least from what I've been seeing in terms of reactions from economists, it doesn't seem like this was enough of a bad report to push tapering into next year, at least not yet. But I think thinking about the details of this report are really interesting because it's very clear that Delta is playing a factor, because we think about something like leisure and hospitality, which has really driven job gains in recent months. Getting an actual zero number there and then seeing, a nearly 42,000 payroll decline at restaurants and bars is quite jarring. And then pair that with no change in the participation rate, and it's certainly not the jobs market that we were expecting to get in terms of the picture we were expecting.
Was there any, Reed, silver lining from this? You said the report was bad across the board. What about wage growth, though?
wage growth was great, and that's a great point. So we saw wages were up 0.6% from the prior month, which was double what economists were expecting. And I think that really is just what we've seen playing out in terms of businesses having a really hard time attracting workers, whether you're talking about manufacturers or retailers or restaurants. And as a result, we've seen a lot of companies and small businesses not only raise pay to try to attract folks, but also give all kinds of bonuses too.
And Kruti, I want to ask you about travel stocks. And Tim and I have actually been talking about this all day. The fact that if you look at the S&P 500, the biggest losers are Carnival Corp, Royal Caribbean Cruises. And like Reed said, you saw a lot of Delta concerns in this jobs report, in the details. Can I connect the decline we're seeing in these travel names to the report we got this morning?
You probably can, and I think you're going to see. Oh, that is not. There you go. Mic's on. I think you probably can, and I think the best way to see it is in the Russell 2000, actually, because it all comes back down to the economic sensitive stocks. Obviously, you're going to see some of that read through into the cyclicals, like restaurants, like airlines, like some of those travel stocks. But at the end of the day, I think small caps are the better ones to really gauge for that, because if you look at airlines, for example, or even Carnival Cruise Lines, for example, as a proxy for this travel recovery, for that broader consumer spending recovery, it's kind of been on a downtrend on the stock market, at least, for about 4 months now, if you just look at this chart, and actually paring back a lot of that kind of early momentum you saw in the sector at the beginning of the year, almost back down to where we were at the end of January. So that's something to keep in mind if this continues. Of course, a lot of that will be the Delta variant and stuff like that, but this is where I said volume really matters, because those recovery stocks are also extremely volatile stocks to play with. So people who are trading the market as volatility plays, these are the stocks that they're going to pick.
Great stuff from Kruti Gupta, Markets Live reporter for Bloomberg News. She's with us live in the Bloomberg Interactive Broker Studio. Also, a big, huge thank you to Reed Pickert, U.S. economy reporter for Bloomberg News, joining us on the phone from Washington, D.C. Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number is 135 million. Vice Media said on Thursday that it's raised $135 million from existing investors as the company's plans to go public through a SPAC have stalled. The Brooklyn-based media company said the cash infusion will be used to fund its growth initiatives, including expanding Vice's direct-to-consumer offerings, content and licensing opportunities, as well as M&A. Curious to see what ends up happening, Katie, with Vice, considering the SPAC's plans have stalled. The company has been worth billions of dollars at certain times when it's raised money in the private rounds, but unclear what the future holds for it. Let's get to check out the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. President Biden says the U.S. economy remains strong even after today's disappointing jobs report. The increase in non-farm payrolls was 235,000 jobs, which was far short of expectations. Biden blames the drop-off in hiring to the Delta variant of the coronavirus, and he says you really need to look at the big picture.
Total job creation in the first 7 months of my administration is nearly double any prior first-year president.
Biden says the silver lining is we continue to add jobs following the pandemic. Unemployment benefits for over 7 million Americans will be ending Labor Day. Pandemic unemployment programs expire Monday, meaning 7.5 million unemployed Americans will stop getting an extra $300 a week in benefits. The president has approved an emergency declaration for New Jersey as the death toll from Hurricane Ida rises to more than 24 in that state. Biden says FEMA is already on the ground and ready to provide all the assistance needed. New York Governor Kathy Hochul says cleanup efforts are in full swing in her state.
The federal government, the state, locality, we're going to be in this together. We're going to be in it till the job is done.
Hochul says the storm has shown us that climate change is not hypothetical. Utility officials say power should be restored to almost all of New Orleans by next Wednesday. Entergy says not every customer will have power back in the city, though some may need to fix damage themselves, especially where the power enters their home. There is still no concrete promise of when the lights will come back on the parishes east and south of New Orleans. President Biden is getting a first-hand look at the damage this afternoon. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studios in New York. Among the most read, Katie, on the Bloomberg terminal this afternoon is a story by Ellen Milligan about Jefferies, the company accused of poaching rivals, employees, and clients. Stifel says the bank has orchestrated it's an orchestrated move of an UK lawsuit, and Jefferies denies wrongdoing. It is the nature, they say, of the competitive market.
Yeah, and this should be a really interesting one to play out because there's a great quote in here from Stifel's lawyer saying that the employees all resigned en masse and that Jeffrey's case is basically that they were moved by the spirit. So sounds like they're taking it a little bit personally.
Yeah, Stifel's European Union accusing the U.S. bank of inducing the people who worked across banking and sales to leave in October of 2019. It said that the ex-workers also took 3 of its clients, causing it, quote, substantial loss and damage. That's according to documents prepared for a London court hearing. Now, UK courts have played host to several high-profile poaching lawsuits. Remember last year, Cantor Fitzgerald lost an attempt to have a suit brought by Jefferies, dismissed on jurisdiction grounds. Now, as part of the case, Jefferies accused the brokerage of making a, quote, concerted effort to stop the ex-employee from repaying bonuses it says it was due. We should note that this lawsuit comes at a time where these companies, look, they've always been rivals in terms of clients and in terms of employees. But we have seen over the last year a large number of high-profile departures from banks, and at the same time, the companies paying more for employees in order to keep them and to make sure that they do not go other places. There's this talent war breaking out.
Yeah, and it's sort of a snapshot of what's happening in the broader labor market at large. You're seeing so much turnover within all different sectors of the economy, and employers are having to pay up to try to retain and to attract talent.
Yeah, check this one out, available at Bloomberg.com and, of course, on the Bloomberg terminal. Jefferies accused of poaching rivals, employees, and clients. This is Bloomberg Business Week, and this is Bloomberg Radio. Much more coming up in just a few minutes.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Jobs Friday, light volume. The Dow lower, S&P, NASDAQ both higher. S&P little changed, but at a record up 2 points right now at 45.39, a gain of less than 0.1%. NASDAQ Composite Index up 27 now, up 0.2% at a record. The Dow lower by 28 points, down by 0.1%. Stocks are struggling for direction as a sharp slowdown in hiring puts the focus on whether the Fed should delay a reduction in the stimulus that has helped push the market to a record. Traders are turning to the perceived safety of technology giants today. We've got the 10-year down 11.30 seconds, 10-year yield right now 1.32%. Gold up 1.2%, 18.30 the ounce, while West Texas Intermediate crude down 0.6%, 69.54 a barrel. Recapping, stocks mixed, S&P at a record up 2 points right now, just about the best level of the day. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, today's jobs report showing that U.S. hiring downshifted abruptly in August with the smallest jobs gain in 7 months. As Charlie mentioned, it complicates a potential decision by the Federal Reserve to begin scaling back monetary policy support by year end. The number we got today, non-farm payrolls increasing 235,000 last month. Economists surveyed by Bloomberg, they wanted to see something more in line with 735,000. So a big miss there. Let's get into it with Becky Frankowitz, president of Manpower Group North America. She joins us as she does many jobs days on the phone from Chicago. Becky, really great to have you back on the show. Is there any silver lining to this jobs report today?
Yeah, Tim, so definitely not a report anyone wanted to see. I would tell you that I'd characterize August as a report of dashed hopes on both sides of the labor, environment. Employers were hoping for the September sunrise that we had spoke about before with increased labor supply and recovery of supply chains, and Delta dashed that. And workers were hoping for this smooth transition, sending kids off to school, returning to work without fear of COVID. That's been dashed too. But I will tell you that we believe the situation is temporary, and I have real-time data that tells us why.
Well, let's hear about that real-time data. What does the future look like?
Yeah, so hi, Katie. We still know we're in a workers' market, and here's why. There are 10.1 million open jobs, so jobs unfilled in our country today. Demand remains right now above pre-pandemic levels, and unemployment continues to decline. So that is a silver lining, Tim, to your question. And we also know, and this is some new data, we know that the talent shortage is especially acute in blue-collar roles. So let's just step back and say, in the past year, demand for knowledge workers, so think medical, IT space, that demand has increased 14%. You're thinking that's a pretty good number. Yet demand for blue-collar jobs has increased 24%, with a 50% rise in operations logistics alone as the shift to online is here to stay. So, we anticipate hiring spikes in ops, logistics, retail as we prepare for the holiday period. So that is the silver lining. But this jobs report in August, ahead of the stimulus stoppage as we go into September, was a disappointing one. There's no way around it.
There is, though, still this mismatch between supply and demand. If there are 10.1 million open jobs and still millions of people who are on the sidelines looking for work right now, why aren't they hopping off the sidelines?
Yeah, so it's unfortunately complicated. So, part of it definitely is stimulus, but that can't answer everything. There is fear, rising fear now around, health, safety in the workplace. And there's complications as, some schools are opening, schools are constantly threatening, are we going to go hybrid or not go hybrid? So it's really an uncertain time personally and professionally for workers in our country. And they are still sitting on the sidelines. And again, what's so disappointing is we all hoped and wanted and believed that we would be past this as we went back into the back-to-school season, but we're not quite out of the woods yet.
Yeah, it's definitely not the start to September that I think many companies and just people expected. But yeah. Becky, I want to pick up on your point on stimulus because we do have those enhanced unemployment benefits starting to roll off next week. And like you said, there's still 10.1 million jobs unfilled. I'm curious what you think that the end of those sorts of programs could mean for the labor market and jobs reports going forward.
Yeah, so we've been tracking it state by state, Katie, as the stimulus has ended, and what we found is it's very uneven. So in some states, especially in states in the South where when stimulus came in, it didn't have as big of a dampening effect. We didn't see as big of a recovery effect when the stimulus came off. In other states, we're just starting to see it roll off now. We have seen some positive momentum come out of a couple of the states as the stimulus stops. But I can tell you one thing, no matter what the state does, stopping stimulus is not going to have the, solve effect that we all wanted it to have. We're going to have to make sure that workers feel safe, they feel valued, they can trust their employers to send people home that are sick, that are around them, and that really is becoming, this trust and care economy is truly the way forward for the American worker.
Becky, Manpower Group is the world's third largest staffing firm, so you do have a really good understanding of what is happening in different areas of the world when it comes to people going back to work or what they want at a firm. What are you seeing in terms of the return to the office, especially among large Wall Street banks and financial services firms?
Yeah, so it's quite interesting. We just did a big 14,000 people survey in 14 countries, to your question, Tim. And what we found is really generationally, demographically, we're seeing some differences. So if you say, who's most excited to come back in the office? Gen Z. They're fresh out of college. They're looking to make their friends. It's where they find their dating pool. Like they're learning. They're excited to be back in the office. Who's least excited? And this is global data, millennials. Millennials are of childbearing, child raising years. They're very concerned about their children getting the virus now, which, a year ago we were saying kids aren't really susceptible. That's okay. So now we know that that was inaccurate. And so there's concern there. Also excited to come back in the workplace are Gen X and our boomers. And think about who's running the world's companies right now. It is the Gen X and boomers. And so we see really varied interest about coming back into the workplace. Now, from a vaccination perspective, that is giving some employees some confidence, particularly as headquarters start rolling out vaccinations. But still, it's very uneven in terms of the excitement of coming back in the office every day of the week.
Becky Frankowitz, president at Manpower Group North America, joining us on the phone from Chicago on this Jobs Friday. Becky, thank you so much for taking the time. We really appreciate it. Bloomberg Business Week is brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at seic.com/IMS. Well, we got much more Bloomberg Business Week coming up after the break. We are going to go to Washington, D.C. We're going to speak with our Senate reporter, Stephen Dennis, all about Senate Democrats eyeing taxes on stock buybacks and excess CEO pay. You don't want to miss it. That's coming up in a few minutes. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week on this Jobs Friday. Tim Stenevik and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. In just a few minutes, we are going to head to Washington, D.C. We're going to get the latest from our Senate reporter there, Stephen Dennis, about Democrats in the Senate eyeing taxes on stock buybacks and excess CEO pay. In the meantime, let's get a check on the latest when it comes to the trading day. Here's Charlie Bellet.
Hi, thank you very much, Tim. We are holding on to gains with the S&P trading at a record. It is up, but barely up by 1 point right now. Little change, perhaps the key takeaway here. We've got the Dow lower by 33 points, down 0.1%. NASDAQ up 23, higher by 0.2%. 10-year's down 11/32. 10-year yield right now 1.32%. Stocks are struggling for direction as a sharp slowdown in hiring puts the focus on whether the Fed should delay a reduction in the stimulus that has helped push the market to a record. Traders are turning to the perceived safety of technology names. Gold, spot gold up 1.1%, $18.30 the ounce. West Texas Intermediate crude down 1.1%, $69.19 for a barrel of WTI. More than 13% of hospital beds in American hospitals were occupied by COVID-19 patients yesterday. That, according to the U.S. Department of Health and Human Services. That is unchanged from the day before. Medical experts, meanwhile, say more has to be done to change the minds of vaccine skeptics. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
One of the things that we've not been able to do effectively is communicate the safety, the efficacy of the vaccines in the right way to a large swath of the population. And we leave open the opportunity for things like this ivermectin self-medication trend to take hold and go out there because we haven't been able to infiltrate into those social media chains that are propagating that misinformation.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we follow on a regular basis, Pfizer up less than 0.1%, little changed. Its German partner BioNTech, the ADRs down less than 0.1%. ADRs of AstraZeneca down 1.1%. Moderna out of Boston up 2.3%. J&J Johnson & Johnson also little changed, up less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Senate Democrats are discussing a wider range of tax proposals than President Joe Biden has proposed. This could include levies on stock buybacks, carbon emissions, and even executive compensation. This as part of a package of measures to help fund a ramping up in social spending. So writes Stephen T. Dennis. He is Senate reporter for Bloomberg News, and he joins us now on the phone from Washington, D.C. Stephen, it's really great to have you on the show this afternoon. Who are the Senate Democrats who are doing this? Because we know that not all Democrats feel the same when it comes to taxation.
Yeah, so basically the first thing they need to do is to get the Senate Finance Committee Democrats on board, and this is what's circulating among those Senate Finance Committee Democrats. They have yet to settle on a particular plan amongst themselves, but we do basically have the menu. You know, you're either lunch or you're on the menu or something or other. You know, that's the old saying. This is the menu of who's gonna make it to the lunch and who's gonna get eaten. And so you have all kinds of things that would potentially affect a lot of stocks, a lot of markets. You know, if you start saying, well, stock buybacks should be taxed just like dividends or have an excise tax on stock buybacks, that would be a huge deal. Supersized CEO pay. You know, they're talking about having an excise tax on CEO pay that exceeds the average worker at that company by a margin they consider to be too high. And even things like mark-to-market rules for billionaires with large unrealized cap gains, which would be a big tax on a lot of entrepreneurs like Elon Musk or Jeff Bezos, who have very large amounts of unrealized capital gains.
And so, yeah, the implications widespread. I mean, just this year, we've already seen about $368 billion worth of buyback. So, Stephen, I'm curious, does this have a shot of passing? I mean, like you said, you have to get the Senate Finance Committee Democrats on board. How likely is that to happen?
I think basically any one of these proposals is going to have a hard road. Right now, Joe Manchin wants to press the pause button on the whole thing, and he wants a much smaller package. He's also, however, taken aim at some of the more traditional tax increases that Joe Biden's proposed. Like, he doesn't want to go to 28% on the corporate tax rate. He's talked about 25% on the corporate tax rate. Well, if you lose several $100 billion there, you might be able to make it up somewhere else. And the question is whether Joe Manchin would stand in the way of some of these things. Now, certainly, I think you're going to have a hard time getting 50 Senate votes for some kind of a carbon tax, even if it turns into rebates for lower-income folks, taxing plastic. I could see some Democrats supporting that. That might be a harder sell, even with the White House. But there are these things that seem to be relatively low-hanging fruit, like these supersized IRAs. There are some people with tens of millions of dollars they've accumulated in their IRAs, and you could just say, well, we're going to cap those at $5 million, and anything over that, you have to have a distribution and pay taxes on it. So some of these things, I think, could very well end up in the package and are a little bit more likely to happen than others.
We should note that even today, when the president was speaking after that dismal jobs report came out, he did once again repeat the line that he will not raise taxes on people who make less than $400,000 a year. It's something that he continues to talk about. What do the Democrats who are proposing these want this money to pay for?
Yeah, so there's $3.5 trillion package of social spending, everything from child care benefits to free community college to expanding Medicare benefits for dental and vision and hearing. There's just an enormous array of things that have been building up, frankly, for decades that Democrats have wanted, as well as things like paid sick leave and paid family leave and maternity leave and all these things. Well, that bill comes out to about $3.5 trillion over 10 years, which is about a 5% increase in federal spending, and you're going to have to find money to pay for it. And it gets if your universe of who has to pay for it is people making more than $400,000 a year, that's not a lot of people, but that is a lot of money. And I think it's going to be very challenging to get it through because those people with the biggest pockets on earth can afford a lot of good lobbyists.
And guess what? A lot of those people are voting members of Congress. Stephen Dennis, Senate reporter at Bloomberg News, joining us on the phone from Washington, D.C. Stephen, thank you so much for taking the time. We really appreciate it. Check out his story on the Bloomberg terminal. Senate Democrats eye taxes on stock buybacks and excess CEO pay. Let's get a check of the world and national news with Nancy Lyons, who's also in D.C. Hey there, Nance.
Hey, Tim. President Biden is putting a positive spin on today's jobs report, which showed smaller than expected growth.
The president said the economic recovery is durable and strong.
Well, I know some wanted to see a larger number today, and so did I. What we've seen this year is a continued growth, month after month, adding jobs, an economy and a job market that can weather the ups and downs of the Delta variant and anything else that comes our way.
The resurgent pandemic slowed hiring, and the president said he would intensify the effort to get more Americans vaccinated. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is in New Orleans this afternoon, seeing for himself the damage wrought by Hurricane Ida. And he's not the only leader fanning out to check on those impacted by the storms. This morning, New Jersey Governor Phil Murphy stopped by the town of Millburn.
It's quite clear our state and our nation does not have the infrastructure to meet this moment and to meet the future as it relates to these storms, which are more frequent and more intense.
Murphy confirms they've seen at least 25 deaths from the storm. Senate Democrats are discussing a wider range of tax proposals than President Biden has proposed, including levies on executive compensation. Former U.S. Treasury Secretary Larry Summers backs the move.
I do think that there are abuses in ways in which executives are paid that enable them to escape taxes, to a substantial extent.
You can hear the full interview with Summers on Wall Street Week tonight at 6 Wall Street time on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. The most recent issue, the one that is available on newsstands, online, and on the Bloomberg terminal right now of Bloomberg Business Week, it is the cities issue. It's a special double issue, and it focuses on cities and the future of cities in the United States and around the world. And one of the stories from that issue of the magazine, the current one, is among the most read on the Bloomberg terminal today. It's about an experiment that's happening as different states are doling out cash to college kids, to theaters, in a $200 billion experiment.
Yeah, this is fascinating because, again, $200 billion given to states. It's amazing how much of that money actually hasn't been spent. There's some great graphics in this article which show that states like Alaska, Delaware, Mississippi, 0% of the money has been allocated, and it's basically free money. They've been free to go spend it.
So New Jersey, for example, is bailing out cash-strapped renters whose debts piled up during the national eviction moratorium. Florida is writing $1,000 checks to police officers. Louisiana is adding to a fund that it uses to rebuild from storms like Hurricane Ida, which of course just ripped through the states. These are among the states nationwide that have been figuring out how to spend nearly $200 billion of direct aid provided in President Biden's American Rescue Plan. That's an unprecedented handout intended to ensure that the U.S. economic recovery wouldn't be derailed by the type of fiscal crisis that followed the last recession. What's so interesting about this, Katie, is that a big concern when the pandemic first emerged in February, March of last year was what would happen to state and municipal finances. If people stopped driving to work and toll booths stopped collecting tolls, for example, or toll roads, people stopped spending money at restaurants and tax revenue there dried up, then what would happen? Well, what ended up happening was, thanks to huge returns in the stock market, people selling stock, and then, of course, also e-commerce and the taxes that were able to be collected on e-commerce, that really helped shore up many municipal and finances and many state finances.
Yeah, you did see a discrepancy in how quickly some states' tax collections did rebound.
Well, check this story out. It's among the most read on the Bloomberg terminal, Bloomberg.com as well. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Traders are turning to the perceived safety of technology giants. Most major groups in the S&P 500 index are lower. The S&P, though, holding on to a gain of just about half a point right now. Little change, light volume, but any move higher today for the S&P will be another record. S&P, right now we've got the Dow down 38, drop there of 0.1%. NASDAQ up 20, a gain of 0.1%. The NASDAQ 100 index up now by 0.3%. 10 years down 12.30 seconds, 10-year yield 1.32%. Gold up 1.1%. Spot gold now at $18.30 the ounce. Bitcoin holding above $50,000, $50,307 on Bitcoin, up right now by 1.5%. West Texas Intermediate crude down 1.2%, $69.17 a barrel. After earnings, Broadcom up 1%, Hewlett-Packard Enterprise also up 1.1%, and MongoDB, a database software company, it is up by 24.9%. Recapping S&P at a record, up 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, in the current issue of Bloomberg Business Week, it's the new cities issue. It's Bloomberg Business Week magazine, and it's available on newsstands and at Bloomberg.com/businessweek. It's an issue that is focused on cities, and one city that it does take a very close look at, and an area of the city is Seattle, and a Seattle commercial district that has undergone trial by virus. The pandemic changed the heartbeat of urban areas across the U.S., few more so than the Pike Pine corridor of Seattle's Capitol Hill neighborhood. So writes Noah Buheier, finance reporter for Bloomberg News, and he joins us now on the phone from Seattle. Noah, for people who haven't been to Seattle or visited this particular area of Seattle, the Pike Pine corridor of Capitol Hill, what's it like?
Well, it's, I think, what a lot of people would imagine as a vibrant at all hours, retail, arts, commercial district. There's music venues, a ton of restaurants. It's not giant buildings, but you've got a lot of, 4 to 6, 7, 8 story apartment blocks that have retail at the ground floor. So it was really the part of Seattle that felt most city-like outside of downtown.
And what happened over the last year as the pandemic took hold and commuters started staying home and not going to those restaurants? And then just a few months later, in the aftermath of the murder of George Floyd, activists took to the streets there to demand racial justice.
Yeah, so look, it was an interesting neighborhood to follow for all those reasons you just mentioned. A lot of the businesses in this corridor were the kinds of places that relied on a vibrant street life and people being able to get together. And obviously, the pandemic made that difficult. And the other thing that was interesting about this neighborhood is that there are just a ton of smaller businesses. So Amazon has one of their grocery stores there. There's a Starbucks Reserve Roastery in the neighborhood. So there's some corporate presence, but there were also a lot of small, scrappy businesses that just had to figure it out. With this piece, I followed a number of them through the last year and a half to figure out how they did it, because while a number of businesses did go under during the pandemic, a lot managed to get to this point through the generosity of customers, through government assistance programs, and just a lot of scrappiness that I don't think people have fully appreciated.
And so, Noah, it's a great piece. And one of the reasons why it's such a good read is because you did track a group of 4 businesses over the past year and a half. And I'm curious, you mentioned the scrappiness of the businesses and the business owners, but I'm curious if there was a uniting common denominator in how they were all able to get through the pandemic.
Yeah, that's a great question. I really think it is the constellation of factors. It was these were established businesses with loyal customers. And to the extent some of them were able to do GoFundMes, government assistance was just absolutely key. Programs like the Paycheck Protection Program, pretty much everyone took that money. It was either a form of bridge financing or to get them to other federal grants, or it was the thing itself that helped get them through. And then, I think another underappreciated part of this is that we're talking about a city where a lot of people have been willing to get vaccinated. And even though we've had pretty strong public health restrictions here in Washington state throughout the pandemic, people were willing to go back to this neighborhood when those things lifted, because we're talking about a city where, more than 75% of people 12 and up have gotten their jabs.
Well, it's interesting because one of the elements of this that really sticks out to me, that really caught my attention, is the graphical representation of the change in weekly visits from 2019 that are in here. Charts that just show how foot traffic has not returned to retail establishments there, to restaurants there, even after the vaccine rollout, to music venues, for example. In some cases, restaurant visits are still down, even after vaccinations, 50% from 2019. How are these business owners dealing with that?
Yeah, that's a great question. I do want to highlight that the data here is really interesting. We were able to get foot traffic data on about 350 locations around this neighborhood. Most of them were, commercial establishments. And I think that data really does show you, like you said, that things are far from being back to normal. Yeah. And the reason these businesses are still, any of these owners will tell you things are not back to normal. I mean, they are still very much in the thick of this. And we're, going into the fall when things like outdoor dining are going to be harder to do. And frankly, in Seattle, just not comfortable because it rains so much here. So I think that's a big part of this story, is that these businesses have been resilient, but they are by no means, out of the woods yet.
And so, Noah, one of the stats that caught my eyes in this story is that the median income in the city is over $100,000, which, as you note, is more than 50% higher than the national average. I'm curious, how important was that factor in explaining the resiliency of some of these businesses?
I don't think it can be understated. Look, there are academics who, have started studying the pandemic's effect on small business. And, while the lens of this story is one particular neighborhood, what I can say is anecdotally, having customers and people who liked your businesses and supported them and who were willing to come in and spend more money and who, maybe kept their jobs throughout the pandemic has just been crucial. Two of these businesses had fundraisers, and they raised, tens of thousands of dollars, and that was just completely instrumental to them, being able to survive to this point.
Yeah, not something that would necessarily be possible in other parts of the country where the clientele who frequent these places don't have these same household incomes and wouldn't necessarily be able to afford, at least during a pandemic and during a time of uncertainty, to throw money at these businesses and support them even in difficult times. Noah Buhire is finance reporter for Bloomberg News. Noah, thank you so much for joining us. The story is a Seattle commercial district's trial by virus. Bloomberg tracked a group of businesses in the Capitol Hill neighborhood for a year and a half and were amazed by their resilience. Check it out. It's featured in the new Cities issue of Bloomberg Businessweek magazine. It's available on newsstands and at bloomberg.com/businessweek. This is Bloomberg Radio, and this is Bloomberg Businessweek.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading ahead of a long holiday weekend. Light volume, people getting away early. We've got the Dow lower, S&P, NASDAQ both higher. Records for the S&P right now, also for NASDAQ, S&P up by 2 points, just about the best level of the day, up less than 1/10%. NASDAQ up 29, higher by 0.2%. NASDAQ 100 index up 0.3. Bitcoin at $50,444. Up 1.8%. Gold, spot gold up 1.1%, $18.30 the ounce. The 10-year down 10.30 seconds. 10-year yield 1.31%. Crude oil retreating today, down 1.1%, down 80 cents a barrel, 69.19 for WTI. As the COVID-19 Delta variant flares, the U.S. economy added just 235,000 jobs in August, the smallest increase since January. Worker shortages persist, with 5.6 million Americans reporting they were unable to work because of the pandemic. Former Treasury Secretary Larry Summers spoke about the jobs picture on Wall Street Week that will air tonight, 6 p.m. Wall Street time, right here on Bloomberg Radio.
It's not that employers don't want to hire. That's not what's holding down job growth. What's holding down job growth is, in many cases, they're having great difficulty finding the people that they want to hire. Ultimately, my suspicion is that that's going to lead to more wage increases, more wage pressure, and from what I'm hearing, businesses aren't having a lot of difficulty passing price increases on.
And just getting a headline from Washington, the White House is proposing a $65 billion plan to combat future pandemics. Again, recapping, equities are trading mixed. The Dow lower, the S&P at a record up 2 points now, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York on this Friday, September 3rd, 2021, a Jobs Day Friday. Well, let's talk about the Delta variant, because speaking of the jobs report, that is the reason why many analysts are saying it was so disappointing today. Lots of virus headlines to get to. Cases globally surpassing 219.4 million, deaths right now exceeding 4.5 million. More than 5.39 billion doses of the vaccine have been administered. Do keep in mind that many of those vaccines require 2 shots. Also, 2 Centers for Disease Control and Prevention studies have found that a growing number of kids and teens got COVID-19 and were hospitalized as the Delta variant became widespread. They did not appear to be getting sicker than in previous phases of the pandemic. Let's get into all of it, as we do each and every Friday, with Dr. Ian Lustbader. He's clinical professor of medicine at NYU Langone's Medical Center, joining us on the phone this afternoon from Long Island. Dr. Lustbader, how are you?
Great, thanks. Happy Friday, Tim and Katie. Hope you have a good Labor Day weekend.
Yeah, well, we are just a few hours away from it, and certainly planning on it being a good one. I want to talk a little bit about what we heard recently from the nation's top infectious disease expert, Dr. Anthony Fauci, that 3 vaccine shots may actually become the standard for most people. That's at least what he's saying. How is the United States going to roll this out at a time when around the world many people haven't even gotten their first shot?
Very good question, and certainly an ethical issue. You know, a number of vaccines really require more than 1 shot. The shingles vaccine, if you've had chickenpox to prevent shingles, are 1 to 2 months apart. The HPV Gardasil vaccine is 3 shots, hepatitis B 3 shots. So there are a number of vaccines that, for optimal immunity, do require 3 shots. And it certainly looks like, because we're seeing so many breakthrough infections, and part of this data is from Israel, that 3rd COVID vaccine, whether, certainly the data is on Moderna and Pfizer, the mRNAs, that 3rd vaccine really boosts antibodies to give, really better protection. The ethics of should we be vaccinating and which people should we be vaccinating for a 3rd shot versus distributing more around the world, that's definitely a challenge. In my opinion, certainly, are frontline healthcare workers if their antibodies are low, they're certainly exposed. That would be a reasonable group to do. Certainly immunocompromised people, that would be a reasonable group to do. Kind of the average person at average risk, that's a question.
Dr. Lustbader, I'm curious, just talking about the U.S., what's the delay on boosters now that, we know Pfizer and BioNTech's vaccine has full FDA approval, Moderna may be next. Why can't a frontline worker walk into a CVS this afternoon and get a booster shot?
Well, they can actually. It's not really according to protocol. If you listen to the authorities, the first tranche of people really are organ transplants, immunosuppressed, people who are on these biologic monoclonal antibodies, and so forth. That's the first group. There's a decision to be made at the end of September as to the next group. The reality is I've got a number of patients who just go into a local pharmacy, get a third shot booster, and apparently are not really questioned. Is that ethical to do too? It's hard to tell. Certainly the vaccines are available, and from an NYU point of view, they're really waiting to give it out to the next group that's authorized rather than anyone who wants it. At some point, if we have an excess of vaccine, it probably will be available. Most patients, I must say, who've had the vaccine in January that we test randomly for spike antibody, they're pretty good. We're not seeing really a lot of low levels. The problem is even people who've been vaccinated, there is a group of breakthrough, 10 or 20%. So even with antibodies, there are some people still getting Delta, usually a mild infection, however.
Yeah, it's a really good point, a really important thing that I've been thinking about a lot. I was talking to Katie during the break, and I was planning to go to Mexico for a wedding later this month, and I decided late last week that I didn't want to fly across the country, cross the border from San Diego into Mexico on a bus with a bunch of people, and do the same thing a few days later to come back and then be around my family. And I'm thinking, wait a second, I'm vaccinated. This is the type of thing I should be able to do, but it still gave me pause because there were so many reports of breakthrough infections. And I think a lot of people right now are having trouble sort of characterizing that type of risk, especially as we do start to go back to school. And we're seeing it play out even in real-time TSA data that shows that people are traveling less than they were earlier this year. I'm wondering how you think people should think about that type of risk.
So part of the problem really is we don't know what is the antibody level. We can measure spike antibodies in people. Again, you don't want to randomly do tests on people just because they're curious. That generates a lot of cost and time and energy. But for individuals, for example, someone like you, who would be put in a high-risk situation who was vaccinated, it wouldn't be crazy to really check a spike antibody level. I don't recommend it for everyone. And if your numbers are high, you can say, look, you have a good antibody response. Unfortunately, for people who are in a high viral load, if someone on that bus is sick with COVID and they are coughing and you're in a closed area, that could, based on a high viral load, kind of overwhelm your antibodies. It really is the sponge and the water phenomenon that your antibodies are like a sponge. But if you get a big splash of water, you could get a breakthrough where the viral particles escape your antibodies, even if they're fairly high. And we can't really tell people this is an antibody level that provides complete protection. That's the rationale for the third booster in certain populations, is to raise that level higher.
Such a challenge, because I think for so many people, they had expectations that after the vaccines were widespread, there would be some sort of return to normalcy and we'd be able to do those things that we did love to do before the pandemic and get to see people we haven't seen in years. We're going to have to put that one on hold for now, though. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center. Thank you so much for joining us, as he does each and every week. We are going to talk much more about the virus throughout the show, of course. In the meantime, in just a few minutes, we're going to be speaking about crypto with David Kintinsky, the CEO of Kraken Bank. In the meantime, let's get a check of what's going on around the world and around the nation. For that, we go to Nancy Lyons in Washington, D.C. Hey there, Nance.
Hey, Tim. U.S. Labor Secretary Marty Walsh admits the work to recover jobs lost during the pandemic is not over. But he refused to say that he's disappointed in the August jobs report showing the economy added only 235,000 jobs, far fewer than what most economists expected.
This is a steady growth that we're seeing here in our economy. Over the last 3 months, 750,000 jobs. Obviously, if you listen to the forecasters, it looks like it was well under, but if you listen to the forecasters last month, we were well over.
Walsh tells Bloomberg one positive is most of the job gains were in the private sector. Well, we've been talking jobs numbers today. New poll numbers show President Biden's Afghanistan exit strategy has cost him support. Bloomberg's Amy Morris reports.
This latest ABC News Washington Post poll shows President Biden's job approval rating down to 44%, a drop of 6 percentage points since late June. The survey shows 77% of Americans supported ending the war in Afghanistan, but 60% did not approve of the way the president handled it. And now only 36% of Americans say the war was worth fighting. 68% believe the U.S. should take in screened Afghan refugees. In Washington, I'm Amy Morris, Bloomberg Radio.
The Pentagon says Defense Secretary Lloyd Austin will leave Sunday on a trip to the Middle East to thank our Persian Gulf allies for their cooperation in the evacuations from Afghanistan. Spokesman John Kirby says Austin will visit Qatar, Bahrain, Kuwait, and Saudi Arabia. He says the Pentagon chief will reaffirm U.S. defense relationships in the region, and he'll also visit with U.S. service members. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Really appreciate it. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Now, among the most read on the Bloomberg terminal is a story about Apple. Apple made some waves a few weeks ago when it announced a feature that would scan photos for child abuse. The idea had drawn fierce criticism from privacy advocates. The company, though, had spent weeks trying to tamp down the controversy, even giving rare interviews from executives, people who don't normally speak to the press, in order to try to set expectations and really explain what's going on here, because it is very complicated. And this, I think it's fair to say, is a rare instance of Apple coming out and saying, okay, well, we are no longer going to do this because people don't necessarily understand what it is we're doing. We're going to go back to the drawing board and figure out what we're going to do. Okay, so here's what's at issue here. The company delaying a system that would have scanned customers' photos for signs of child sex abuse, this after fierce criticism from privacy advocates who feared that it could set the stage for other forms of tracking.
Yeah, it's interesting. It'll be interesting to see what the drawing board brings them if they retool this at all. But yeah. Tim, we've been talking about it all week, that Apple really has come under a lot of scrutiny just in the past few months. And just this week alone, it changed its App Store policies in response to criticism about the 30% cut it takes from app developers. Now, some of those media apps will actually be able to keep all those profits. And even within the company, you're starting to hear more employees be very vocal about pay equity recently. Yeah. So it kind of feels like a reckoning for Apple.
Yeah, it does. It does, though, come at a time and against the backdrop of Apple stock touching new records, over the past few days. So it doesn't seem like it's, at least at this point, dissuading investors. The company did announce this feature about a month ago in early August, along with other tools that are meant to protect children and root out illicit pornography. It quickly, though, faced concerns that it would create some sort of backdoor through a company's highly prized privacy measures. Remember, Apple is a company that has prided itself on being a privacy-focused company. A lot of the marketing has been around that. And there are concerns from privacy advocates that say, well, it might be okay in the United States for something like this, but other countries where governments want access to phones, it could be more troubling in those places. A story that continues to develop, and we will, of course, bring you the latest. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell, ahead of a long holiday weekend for a lot of people. In fact, we're looking at records right now for the S&P and NASDAQ. S&P, best level of the day. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed in quiet trade today with the Dow currently down 37 points. S&Ps are higher by 3, NASDAQ outperforming, up by 40. The U.S. 10-year yield at 1.32%. Gold is up 20 points. Transports fall 103. And among the main 11 S&P sectors, leaders were tech and telecom, while energy and the financials were under pressure. Leaders to the upside in the Dow, Salesforce and Home Depot. American Express led to the downside. And in deal news, Chevron seeks to sell its Eagle Ford Basin assets for $3.8 billion. And in other news, Democrats are discussing taxes on stock buybacks and CEO pay. And the White House may scale back the COVID-19 vaccine booster plan. Wrapping things up, MongoDB soared as much as 26% after earnings to an all-time high. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we cannot, Katie Greifeld, talk enough about crypto. Bitcoin, I almost said shares of Bitcoin. Bitcoin price higher by $834 right now. That's trading at $50,000, 383 right now. David Knitsky is Chief Executive Officer at Kraken Bank. Kraken Bank is one of the largest crypto exchanges with over 8 million users worldwide. They've had approximately 1.5 million new signups over the course of the second quarter of 2021. That is why I'm saying we cannot talk enough about crypto. David, thanks so much for joining us. You were joining us live from Cheyenne, Wyoming, where you are based. Katie and I were both talking during the break, and we said, Wyoming. Why Wyoming? Tell us why.
Well, Wyoming passed the first of its kind new regulatory license here for a special purpose depository institution. It's a state chartered bank. And up until now, crypto companies have really been round peg, square hole into existing licenses and regimes that didn't make a ton of sense. And we're kind of locked out of the existing banking world. So for that reason, we're bringing the U.S. business under a more certain, more formal, and better regulatory regime, as well as expanding into new opportunities, new products and markets. As you see, everything's converging between crypto, neobanks, fintech, traditional, and so we want to be at the heart of that market as well.
But you do call yourself a bank?
Yeah, we are a state-chartered bank.
And so Wyoming is interesting, obviously has positioned itself to be a crypto hotbed. Where does that stand with the rest of the United States? Are other states moving towards Wyoming, or is Wyoming really an outlier at this point?
Wyoming definitely got the ball started, but the ball rolling. But a number of states have, let's say, borrowed liberally from the Wyoming playbook and enacted their own version of a similar charter. And it's provoking federal regulators to take action as well. That's kind of the beauty of our republic and our system here, where states can be the laboratories of innovation and push things forward faster than the federal government has. So it's really been a spark that's moved the whole industry forward.
David, you say that Kraken will be the first United States crypto bank. It's I'm wondering the problem that you're setting out to solve here. What is not being met by traditional finance?
Yeah, so in the traditional regimes right now, you can either apply for 50 state money transmission licenses, or you can try, and none of them have like crypto-specific language. They're built for like Western unions and fintechs of the world. And then, or you could try to pursue a banking license, but the federal regulators, the OCC, the FDIC, have been inconsistent about that. And they don't have written rules about how they're going to treat crypto that has a dedicated supervisory and oversight manual. We just want to know, hey, this is how we're going to be regulated and what our expectations are, and we can meet them. So for those reasons, the lack of clarity around some of the stuff in other states is really suboptimal. And banking has been a traditional problem for crypto. Kraken's lucky to have a swath of good third-party banking partners, but there's nothing like vertically integrating and controlling your own destiny direct to the Fed.
And so, David, I've always been curious, how do you scale? Obviously, there are regulatory hurdles, but in terms of the average American who maybe only has a passing understanding of what Bitcoin and what cryptocurrencies are, how do you convince them that this is the next, wave of banking? This is the next evolution of how you handle money. How do you bring that message beyond just the cryptocurrency community?
Yeah, well, one, the cryptocurrency community is growing rapidly, and more kind of mainstream adoption is taking place. We think that's going to continue. So on the one hand, the market's coming to us. But on the other hand, this banking license lets us offer online mobile checking accounts and savings accounts and traditional equities brokerage, things like that mainstream America are used to. And so if you put that side by side for crypto, it's a kind of a great conversion mechanism.
You do know on Kraken Bank's website that you are not FDIC insured. The money that you put in, the crypto you put in, is not FDIC insured. Explain why that is a little bit, and why you think that consumers who might be a little concerned about that should or should not be.
Yeah, if anything, there are advantages to our structure. So the way that the SPDI charter works is we are required to be a fully reserved, fully backed bank. So we take customer deposits and we keep 100% of it in cash. So we don't have the types of market or credit risks or insolvency risks that the FDIC was meant to protect against. So as a result, we're kind of exempt from having to apply for that. There is no, risk because we're not lending money out into mortgage portfolios. We're not putting it into, we're not even putting it into treasuries, let alone longer duration or riskier instruments.
And so quickly, David, I'm curious, Kraken was the first crypto exchange to receive a banking charter, and Kraken, along with crypto bank Avanti, have tried to tap into the Federal Reserve's payment system. Little luck so far. And I'm curious, wouldn't using the Fed's payment system sort of go against the spirit of crypto?
And David, we just have about 30 seconds, but then we're going to come back with you after we do some news.
Yeah, well, one, our mission is to kind of promote the adoption of cryptocurrency to enable more financial freedom. One way to do that is to get a bridge from the legacy or traditional system to crypto. And then once they're in crypto, they can take all advantage of the crypto-centric kind of ethos.
Okay, we're going to dig into a little more after the break with David Knitsky, Chief Executive Officer at Kraken Bank. David joining us on the phone from Cheyenne, Wyoming, because from a regulatory perspective, that's where he can make it work. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Steinbeck and Katie Greifeld live in the Bloomberg Interactive Brokers Studio in New York. In just a few minutes, we are going to get back to our interview with David Knitsky, the Chief Executive Officer of Kraken Bank. He joins us from Cheyenne, Wyoming. As we talked about, he is in Cheyenne, Wyoming for regulatory reasons because the state does allow for a bank charter of his type. We're going to talk stable coins. We're going to talk more about Kraken Bank and how the company is really getting so much interest in people who want to actually sign up for services there. In the meantime, let's get a check on the latest with the trading day. Charlie Pellett.
Thank you very much. 28 minutes to go. Let's begin with Bitcoin. Right now up 1.8%, 50,450 on Bitcoin. We've got stocks trading mixed. We are looking at records right now with the S&P up 2 points, up by about 0.1%. NASDAQ up 36, also at a record up 0.2%. NASDAQ 100 index up 0.4%. The Dow, though, on the minus side, down 36, a drop there of 0.1%. Jobs Friday, traders turn to the perceived safety of technology giants. Most groups in the S&P 500 index are lower amid low volume before the Labor Day holiday. Stocks struggling for direction as a sharp slowdown in hiring puts the focus on whether the Fed should delay a reduction in the stimulus that has helped push markets to records. 10-year down 11/30 seconds. 10-year yield now 1.32%. Gold is up 1.1%. Spot gold 18.29 the ounce. West Texas Intermediate crude down 1.1%, 69.22. It was, however, a winning week for West Texas Intermediate crude. The Biden administration has unveiled a $65 billion plan to prepare for future pandemic threats, likening the ambitious proposal to the Apollo mission to the moon. Medical experts, meanwhile, say more has to be done to change the minds of vaccine skeptics, including one-on-one chats. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
It takes 15, 20 minutes sometimes of one-on-one conversations, but you can see people understand and start to realize what the benefits are of the vaccine and what the misinformation really is. I realize that's a very labor-intensive way to communicate, but it is probably the more effective way to communicate than trying to do these mass media campaigns and those types of things.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares higher now by 0.1%. Its German partner BioNTech, the ADR is up 1.3%. AstraZeneca down 1.1%. Moderna up 3.9%. J&J Johnson & Johnson now up by 0.1%. Recapping stocks mixed, S&P up 2, a gain of 0.1%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellett. Let's get back to David Knitsky, CEO at Kraken Bank, joining us once again on the phone from Cheyenne, Wyoming. David, Kraken Bank, and I should say Kraken was the first crypto exchange ever to receive a banking charter. I'm wondering, given the increased interest in crypto, the way we do see traditional financial institutions starting to embrace it, if you expect to get significant competition from the big names in banking and even community banks.
Yeah, I mean, I expect more and more to realize the opportunity and come to the market. We welcome them. I'm not particularly concerned about it, as you see any new like technology medium. Normally, it's the folks who are kind of that native to that medium are the ones that do best. I think it'll be pretty challenging for institutions and incumbents to really adopt to crypto fully. But I think it does help the market more broadly. And I do think the question is the existing financial industry coming to crypto rather than crypto coming to the financial industry.
And so I want to switch gears and talk about stablecoins because I'm kind of obsessed with them. For those listening who don't know, stablecoins are cryptocurrencies that try to maintain a fixed exchange rate with a fiat currency. Usually it's the dollar. They try to maintain a one-to-one peg. They've come under a lot of scrutiny lately. Some people might have heard of Tether. It's the largest stablecoin. It was supposed to be backed one-for-one by U.S. dollars. We learned in May that it wasn't, that it actually holds a ton of commercial paper, maybe 31 billion if you look at Tether's market cap. I'm curious what that could look like going forward. We know that Treasury Secretary Janet Yellen is concerned about stablecoins. Some Fed policymakers have made worried noises as well. I'm curious, David, whether you think that we could see regulation in that space.
I always expect regulation in new financial markets, no doubt. I think the stable coins are a net benefit and a boon. In fact, the U.S. should love stable coins. It is the best way to maintain our dollar reserve and hegemony and for our kind of global reach and global economic clout.
And so the U.S. should love stablecoins, but we know that the U.S. doesn't love stablecoins. And you do have banks like Barclays warning that this could raise some really thorny issues for the Fed. If there is a run on Tether, people trying to redeem their holdings, that could cause Tether to dump commercial paper en masse. And the commercial paper market is crucially important to just the functioning of companies. So I'm curious, what would get the U.S. on board if they should love stablecoins?
Yeah, I mean, look, I think that, it's not surprising that a bank would be wary of something that definitely is competitive to it. And there are certain areas of stablecoins that, could potentially use a little bit more transparency, no doubt. And in fact, even Tether, which is certainly the more questionable ones in the market, it's getting better. And it is definitely changing its kind of balance sheet to these concerns. So I do think that's going to change over time, and there's going to be more transparency, whether by force or just by market dynamics. So I expect that to happen sooner rather than later.
Hey, David, we only have a minute left. Give us an idea of the type of regulation you'd like to see on a federal level so we can see these types of charters become more widespread.
Yeah, so again, as I said before, I think kind of the framing has been backwards a bit. It's not, the main question is not how to fit crypto into the existing frameworks in financial world today. It's how to update our financial industry for the economy of the future and stay innovative. And so what I'd like to see is clarity, right? So, and less discretion, more clarity, defined treatment of crypto assets and expectations in terms of compliance and requirements, and dedicated supervisory and oversight programs that understand how crypto works.
All right, we're going to have to leave it there. David Knitsky, CEO of Kraken Bank, joining us on the phone from Cheyenne, Wyoming. David, thank you so much for taking the time. A fascinating conversation, Katie. I know we got to get him on our other show, Quick Take Stock. It
Absolutely.
airs each and every day at noon Eastern time at Bloomberg.com/quicktake.
Yeah, and I mean, stablecoins, they're in almost every cryptocurrency transaction. I am obsessed with it. It's the perfect intersection of fixed income with cryptocurrencies. You can't ask for anything better.
Well, if you're Katie Greifeld, you can't ask for anything better. Well, let's get a check of the latest world and national news. For that, we head to Washington, D.C., to check in with Nancy Lyons. Hey there, Nance.
Hey, Tim. President Biden is busy assessing the devastating impacts of Hurricane Ida in Louisiana. Meeting with state and local officials in the New Orleans area, Biden says he understands the frustration about the restoration of power and says FEMA is working to distribute emergency generators. The Biden administration is racing to set up a system for resettling tens of thousands of Afghan refugees.
Many of these evacuees fled the Taliban with little more than the clothes on their backs. Now, a State Department official tells Bloomberg the agency plans to spend as much as $2,275 per person to help them pay for housing, food, schooling, and other necessities. The official also says the State Department's consulting with Congress to see if Afghans can be eligible for federal benefits, including Medicaid. A resettlement director says humanitarian parolees will be eligible for federally funded health insurance through the end of this month. In Washington, I'm Nathan Hager. Gallagher, Bloomberg Radio.
The Supreme Court put abortion rights back on the political front burner, allowing a ban on most abortions after 6 weeks to take effect in Texas. These kinds of restrictions could turn off suburban voters who've stuck with Republicans on an economic issue. But Brown University political science professor Wendy Schiller is not so sure it'll move next year's midterms.
This issue just never seems to drive the core group of voters that are most affected by it to the polls. It drives anti-abortion people to the polls, but not so much pro-choice. So it doesn't seem to matter as much.
Wendy Schiller says many Latino voters do not always side with Democrats on abortion rights, and Democrats are hoping to keep them in their coalition in 2022. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that update, Nancy Lyons, Tim Stenivek, and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, buy now, pay later. It is so hot right now.
It's so hot right now, especially if you're a teen on TikTok, apparently.
Or even a millennial or Gen Z, like us. We're not Gen Z.
Well, I'm a millennial.
Yeah, okay, I'm a millennial as well. I'm what they call a
geriatric.
Thank you for reminding me.
Yeah,
I forgot.
of
Because I'm a geriatric millennial. This is a great story, among the most read on the Bloomberg terminal this afternoon. It's all about Klarna, the $46 billion shopping app. When you hear buy now, pay later, you could also be thinking of Afterpay. That's the company that Square announced recently that it was purchasing. It's an Australian company. But increasingly, these apps are becoming more and more appealing, especially to people who are in their 30s. Klarna's obvious appeal for millennial and Gen Z shoppers helped it snag a $45.6 billion valuation in a recent funding round that was led by SoftBank's Vision Fund 2. It's a Swedish company. It's quickly expanding. It operates in much of Northern Europe, but it also is pushing aggressively into the U.S. It does say that it's the world's most valuable fintech startup after Stripe. One backer told the Times of London that it could be worth $125 billion, Katie, in 18 months. For context, that's more than HSBC.
Yeah, that's pretty wild. I mean, that valuation definitely caught my eye. And it probably helps that Klarna is so ubiquitous on social media right now. I mean, if you go on TikTok, you can find these videos of teens, millennials, Gen Z, across the age spectrum, basically dancing with Klarna clothes on, talking about how in the past I didn't have money, I simply couldn't shop. Now I can just pay later.
Yeah, it's a new idea, thinking about credit in a different way, increasingly popular with young people. We see also from companies like Affirm, part of the, it is now a publicly traded company. Last week, of course, it surged on the news that it could potentially, or that it would have a partnership with Amazon. Other companies exploring this include Apple, as Bloomberg has reported in the past. This is Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. S&P just turning negative right now. Has been swinging between gains and losses all day, but right now looking at a loss of just about half a point. S&P is at 45.36. The Dow down 58, drop there of 0.2%. NASDAQ on track for a record close, up 28 points right now, a gain of about 0.2%. 10 years down 11.30 seconds. 10-year yield right now 1.32%. Gold up 1.1%. 18.29 the ounce. West Texas Nvidia crude down 1%. 69.28 a barrel. Stocks struggling for direction as a sharp slowdown in hiring puts the focus on whether the Fed should delay a reduction in the stimulus that has helped push the market to a record. Again, though, the S&P just turning negative, down now by 1 point. Bottom line here, little change to mid-light volume. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is the drive to the close. We are just over 10 minutes away from the close of trading on this Jobs Friday, September 3rd, 2021. Brian Jacobson is joining us now, Senior Investment Strategist at Wells Fargo Asset Management, $604 billion of assets under management. Brian joins us on the phone from Milwaukee. We heard an update from Charlie Pellet just moments ago about what exactly is happening in the markets right now. Stocks struggling to find a direction. The S&P 500 is just down, not even a full point, so pretty much flat right now, while the NASDAQ is in the green and the Dow is lower by 0.1%. Brian, talk to us a little bit about the equity market reaction to today's jobs numbers. The U.S. hiring slows sharply amid the Delta variant. Non-farm payrolls increasing only 235,000 last month, a huge miss. Why not a bigger equity market reaction?
Well, that's a good question. When I saw the headline, my eyebrows went up.
Yeah, I said
a little bit of shock.
Wow.
But and I think it's just because the equity market investors in general are looking at the details here, right? That leisure and hospitality was very weak, retail is very weak, and so I think people can attribute it mainly to the rise of the Delta variant, just affecting consumer behavior, maybe potential employee behavior, that they're not as willing to go in those kind of high contact jobs. So there was strength in the manufacturing sector, and so I think that's really the explanation. Is it's still a good number. It's not great, right? Going from great to good doesn't have to be bad when we can attribute.
But it was such a big miss. I mean, 733,000 is the survey of economists from Bloomberg. That's what we were looking for.
Well, that's true. Yeah, it is an awfully big miss, but it is, I think, to use the term that the Fed has really enjoyed using, it looks transitory to the extent that the Delta variant looks like it might be peaking. I think that we could see a nice surge in September or October for job creation.
Well, let's wrap that into what we're expecting out of the Fed. If September is a really strong month for the labor market, I don't know, in conversations today, it feels like a Fed September tapering announcement is off the table. I'm curious how you think Federal Reserve policymakers and Jerome Powell are looking at today's number, knowing that we have, for example, enhanced unemployment benefits rolling off just next week.
Yeah, that is one of the factors that could lead to a September surge in hiring. If it's the rolling over of Delta, the expiration of those enhanced benefits. And our position is that we think that the Fed wasn't going to announce tapering per se in September, that they would actually likely like to tee up tapering in September. And so ever since the Jackson Hole speech, that's been our position, is that they would like to see that further progress on the labor front, and that likely in September they'll still say that if we continue to see decent gains and high inflation, that it would be appropriate in the next few meetings, which for us then that would mean likely in December, to actually start tapering.
Is
so we didn't
this
think that
considered
actually
a
tapering in
decent
September was on the
gain,
table.
though?
I'm sorry?
Would this be considered a decent gain?
Oh, I think so. I think that they would likely look through this and look at the details, saying that, it's still a decent number on a 3-month moving average. We're not going to get another employment situation report by the September one, so they'll look at some of the other data. But I don't think they want to poo-poo this jobs report too much.
So I'd like to talk a little bit more about tapering, regardless of when we get the announcement. When tapering actually starts, when the Fed does start to reduce the pace of its monthly bond buying, how do you expect that to play out in markets, and particularly the bond market? Because theoretically, there will be less demand for bonds, I would think, just by the laws of supply and demand, that should make yields go higher. But you haven't really seen that happen in the wake of Powell's Jackson Hole appearance.
Well, no, and the Fed is a quite price-insensitive buyer of bonds. 80 billion a month for treasuries and 40 billion a month for mortgage-backed securities. We also know that we have the debt ceiling, and so maybe issuance isn't quite what it will be come October, assuming that Congress passes a new budget and perhaps lifts the debt ceiling. And so we could have those technical factors at play where simple supply and demand would suggest that we should likely see yields rise. And that's been our position. We are expecting to see that, especially on the long end of the yield curve, because we know that the Fed has wanted to be somewhat neutral along the curve as far as what they're buying. And so we think that we could see the 10-year Treasury move up. We're actually more positioned for the longer end, say the 30-year, to move back above 2%. We're kind of down around 1.95-ish%. We think we could get back up to 2.25, maybe 2.15 to 2.25 by the end of the year. So a pretty decent move from here.
Hey, how are you thinking about inflation? Because we did see in this report, I guess you could say the silver lining was wage growth. And I'm wondering what that signal that sends you about potential price increases, in other words, inflation not necessarily being transitory, because wages aren't necessarily something that go down.
Yeah, that is one of the factors I think that could play into the Fed's thinking on this, that maybe they don't want to kind of remove or push out the timeline for tapering, is that you do see the wage growth. Some economists fear a wage price spiral. I personally don't think that that's necessarily always in the data. We haven't really seen real wage gains, especially for lower income workers, for this recovery or over the last few months. So if you look at the inflation numbers, those have increased faster than what we have seen the wages, especially on the lower end of the spectrum. So, in a way, I think that the Fed would kind of welcomes to see that wage gain, but you don't want to see it jump too much to instill fear in investors that you are going to see some sort of wage price spiral.
And so, Brian, I'm going to bring up a kind of taboo topic because, like you say, inflation is high. We know there's wage pressure. If you look at the labor market, still millions of jobs short, and the rate of economic growth is slowing. So when can we talk about stagflation?
Well, I don't think we can really get to stagflation until we see negative growth. And it's mainly because the stagflation of the 1970s, right? You had double-digit inflation growth, and right now we're running anywhere from 3 to 5%. So until we get above, say, 7% with inflation, and if we see economic growth ratcheting down to something closer to maybe 1% real, I don't think that stagflation is appropriate. It's more about reflation. So you have the higher inflation, but you still have a recovery pace of economic growth. And that's why I think that the equity markets can still remain fairly attractive. You have low yields. Mm-hmm. Yes, you have high inflation. Hopefully it's transitory, but there is still decent growth. Going from great growth to good growth doesn't have to be bad.
Brian Jacobson, we're going to have to leave it there. Thank you so much for taking the time and joining us on Bloomberg Business Week. Brian, Senior Investment Strategist at Wells Fargo Asset Management, more than $600 billion in assets under management. He joins us on the phone from Milwaukee. We are just about 2.5 minutes away from the market close. The Dow lower, the S&P 500 lower by less than 0.1%. The NASDAQ, though, in the green, higher by more than 0.1%. Interestingly enough, Katie, on a day like today, we look at the 5-day to see where we're ending the week. If we do close at levels that we see right now, the S&P 500 is still closing in the green by 0.5 percentage point. The NASDAQ, though, the winner, higher by more than 1.5%. Coming up next, it's Bloomberg's Beyond the Bell. This is our cross-platform coverage of the market close with our colleagues from Bloomberg TV. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rich, Nolly Bassick in for Caroline Hyde, counting it down to the closing bell, here to help take us beyond the bell. It's our global simulcast on a Friday. Tim Stenovic making an appearance, as is the Quizmaster, Katie Greifeld, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. And Tim, it's been an interesting day here. You had the S&P 500. It opened lower. It was actually lower for a good portion of the day. We saw a bid come in around lunchtime, but that's fading here as we get a little bit closer to the close.
Yeah, it certainly is. But I think flat is sort of the word of the day when it comes to the way the S&P 500 is going to finish, really struggling for direction on a day like today, trying to make sense of that jobs report. Look, was it a one-off? Was it a blip? Does it change the way that the Fed is thinking about tapering? I think helping things not really move along too far is the fact that volume was so low today, down about 19% compared with the last 30 days.
Yeah, it's probably important to keep that in mind, that there's no one actually around to trade this data, really. So we might have to wait until Tuesday to get the full reaction. But, Tim, I want to point out, if you look under the hood, you did see tech right out front, even though the overall S&P 500 was flattened. I mean, that makes a lot of sense to me because the Apples, the Amazons of the world, they're probably going to make money no matter what happens to the economy.
Yeah, and speaking of that low volume, it's a low VIX. We're ending the VIX this week at a 16 handle, and given that Labor Day is right around the corner, there's a big question about whether some of that uncertainty comes back with so many catalysts ahead of us.
And Romaine, a lot of interesting dynamics going on in the bond market. I know that we've joked that, yes, the 10-year has been above 130 before, but there certainly seems to be a lift up today in yields that we didn't have the last few days.
All right. When you mentioned volume, of course, coming into the bell, we're about 21% below the 30-day average on the S&P with regards to volume, and volume across the tapes A, B, and C right now coming in at under 8 billion. Near the closing bells, let's walk you through the numbers. Dow Jones Industrial Average down 72 points or 0.2%, 35,371 and change. The S&P 500 looks like it's going to finish the day down by about 1.4 here, 45.35 right now. So that's less than a fraction of 0.1% there. NASDAQ Composite going to finish the day higher, 32 points higher, 0.2% here. And the Russell 2000, which had actually had a pretty significant outperformance last week, underperforming here on the day and on the week, down about 0.5%, 22.92.
Yeah, it's interesting seeing the NASDAQ finish in the green right now, because if we look at the advancers versus decliners today, 1,227 stocks actually advancing, but more than 2,000 actually decline. So it speaks to the companies that are actually moving higher. To Katie's point, it's those bigger companies. It's those ones that people were flying to, potentially thinking about safety.
And Tim, you really see that for our radio audiences. We do, as always, it is our sector level, some of the winners and some of the sector losers. And the winners is exactly what you said, Tim. It's semiconductors, it's tech and hardware, it's software services, but it's only up about 0.3 to 0.8%. Everything else, if you go to the bottom, looks like to be a rotation out of that cyclical, out of that reflationary trade. It's utilities, it's dividend financials, it's transportations, it's energy, it's capital goods. That's what is off anywhere from 0.5 to almost 1%, Katie.
Yeah, well, boiling down from the sectors to the individual gainers, I'm taking a look at Nvidia. It just missed a record close. That's after Jefferies raised its price target to $260 from $233. That's after analysts from Jefferies met with the company and left with increased conviction on Nvidia's data business center. And sticking with the chip makers, I'm also looking at Broadcom, because apparently we're still in earnings season. The company reported after the close yesterday, earnings were good, broadly beat expectation. Sales growth a little slower than some of its peers, but we learned from the CEO that was on purpose. The company is really focused on supply discipline right now. And finally, let's end with Didi, because this company has been right in the crosshairs of China's crackdown. City of Beijing said to seek an investment in Didi that would effectively give it control of the ride-hailing app. And it was up as much as 9%. We can see it closed about 2.4% higher, Tim.
All right, from gainers to decliners, let's talk a little bit about Roku. The company finishing the day down by 1.2%. It did fall as much as 4.4%, extending yesterday's nearly 6% decline. It does come after Business Insider reported that Amazon is working on its own TVs. This would be powered by Amazon's Alexa service. Roku, of course, does make its own branded TVs that do have the Roku platform. Roku shares moving lower in response. Yext finishing the day down more than 6.3%. It's a digital media and technology services company. It was down as much as 15% earlier today. This is a company we don't talk about a ton, but they do business listings, reputation management, directory services. The company, though, forecasted a wider adjusted loss per share for fiscal 2022, all about the Delta variant. Morgan Stanley, D.A. Davidson cut their price targets on the stock. Beyond Meat finishing the day down by close to 4.4%. This after the company's COO stepped down. He'd only been there less than 2 years. Jonathan Nelson is VP of North American Operations. He's going to step into the role. Taylor will Beyond looks for a replacement. Potentially, though, maybe I'll eat some Beyond Meat this weekend.
It's not bad.
Weekend.
It's actually pretty good.
Oh, it's good. I like it a lot.
I recommend it. As
well, maybe
I guess
you can be the COO.
Tim and I are.
How much do I have to eat to get that job? That's the question.
You know, we get serious, Tim, for a minute. No one can do GMM like Caroline, but, well, maybe we'll try to do yields the way she can do them as well. On the day and on the week, yields are pretty much giving us a lot of insight into what we got from the jobs report this morning. On a day and a week, you were higher. You've migrated from a 127 to a 132 and a 189 to a 195. And that's really where, Tim, I think we kick off this discussion of at least the bond market for me was telling me that maybe inflation runs hotter. Maybe we let these yields drift up higher because if employment isn't on a sustainable path, at least from one, and I'll say it again, one data point, although it be a one important data point, that may be where the market is thinking.
It is one important data point, and also buried in that report was wage growth, which did come in relatively high. And I think the important thing to keep in mind there, Romaine, is that if we are seeing wages actually grow, if that is to a certain extent getting workers off the sidelines, but not enough, to what extent are companies and businesses going to have to continue to raise wages, and how does that contribute to inflation moving forward?
Yeah, and now it becomes a question about stagflation when you have a labor force participation rate stagnant like that and you see wages going up. And of course, you have an economy. We haven't really talked about this today, but of course, all of those revisions that we saw in GDP over at Goldman Sachs and Morgan Stanley, you have to start having that discussion here. Maybe nobody's ready to throw in the towel just yet, but you wonder here in less than 3 weeks' time when the Fed does meet at their latest meeting here, what that conversation is going to be like behind closed doors.
Well, Romaine, I'm delighted to hear you bring up stagflation because I actually just asked Brian Jacobson, Senior Investment Strategist at Wells Fargo Asset Management, about it. Because, you know, if we look at what we're dealing with in the economy, inflation's higher than everyone thought. Still millions of jobs short in the labor market. At what point can we talk about stagflation? He says it's still too early. We're still in research.
Katie, can you define stagflation? This is the new quiz.
I can try. I wasn't around in the 1970s. But I know high inflation, slowing economic growth. It's not so
Do you know what the labor force participation rate was in the most recent month?
61.4%.
Do you know what Nomura told its staff to refrain from?
Be nice to the new girl,
Wow.
Romaine. She's killing
I'm
it.
not being asked these questions.
Katie is killing it. Shanali, weigh in here, though. There is a point
She's got
about
to defend her title.
Well, and what we're trying to do is look into those.
If you're going to brag, you got to, you know.
We're looking into those jobs numbers. I mean, the unevenness we saw, right? And you're thinking about travel, leisure, and the trouble we saw there. No one wants to let up on those sectors completely. It's a darling of retail traders. It's a darling of private equity. But you've got to wonder what happens as this variance spreads.
the women, Romaine, outnumber the men on this program 3-2. So tread carefully as we think about interesting points, Tim, quickly here on stagflation, because I asked that same question to all of our guests on Monday and Tuesday. No one was worried about it, but I do wonder when we maybe start to have some conversations.
Well, look, I think the real message, too, is the importance of the high-frequency data that we've been talking about so much and the changing consumer behavior that we've seen over the last few weeks when it comes to TSA data, when it comes to open table data. And we indeed saw that manifest itself with, of course, the travel and hospitality part of this report that showed no net gain. I mean, it does show that consumers are concerned about that, and that has a serious result on the economy. The big question I have thinking about this moving forward, Romaine, is what happens in September when kids go back to school, when potentially parents are okay with actually going out and looking for
if they
work.
go back to school. I mean, think about how many school districts reopened in August and have already had to backtrack on some of those back-to-school plans down in Florida, down in South Carolina, Kentucky, and a lot of these states here. So, yeah, I mean, over the next couple of weeks, we're all supposed to send our kids back to school. But, you know, are they going to stay open, Tim? That's a real question.
Yeah, that's the question.
It's not whether they reopen.
Hopefully Delta has peaked, at least in the South, but there are concerns that it hasn't even hit other parts of the country yet.
Yeah. So real serious issues here. One other serious issue, Katie, is do you know which bonds of which African country rallied after the president assured creditors in a tweet that they would be paid?
I could tell you that I knew that at about 5 p.m. yesterday. It has since escaped my mind.
Already.
I'm sorry. I'm resting on my laurels.
Taylor, did you take this test?
No,
And
I was
Shanali, what about
exempted.
You know,
Quiz go.
some people say if you have time to take the quiz, then you're not working hard enough. Okay, I'm just going to leave it at that. Well, I hope you guys don't work too hard this weekend on the 3-day weekend. Have a great one to our colleagues at Bloomberg TV. Thank you so much for joining us on Beyond the Bell, our cross-platform coverage of the Bloomberg Markets Close. We will see you same time, same place on Tuesday, Bloomberg TV, Bloomberg Radio, and on YouTube. Have a great weekend, everyone.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, there you have it. The close of trading on September 3rd, 2021, wrapping up, well, partially the first trading week of September. Let's give a rundown of what we saw over the last 5 days. The Dow ending the week in the red, down more than 0.2%. Katie, the S&P 500, even though it's just ever so slight decline, investors kind of saying, equity investors saying meh to this report, finishing the week, I should say, up by close to 0.6%. The Nasdaq, though, the clear winner, higher by more than 1.5%.
Yeah, we just missed out on record close on the S&P 500. But again, just missed on a day where we saw such a disappointing jobs report is pretty remarkable.
I think you made a really good point about volume and trading being so light. And, it was something Creedy said, too. Wait till next week and see the way that equity investors respond to this.
Absolutely.
All right, well, let's get a check of the latest when it comes to world and national news. Nancy Lyons is standing by with that for us in Washington, D.C. Hey, Nance.
Hey, Tim. President Biden is in New Orleans this afternoon seeing the devastation from Hurricane Ida, and he's assuring local leaders the White House will help them get back on their feet.
We're in this together, and so we're not going to leave any community behind, rural, city, coastal, inland, and I promise we're going to have your backs till this gets done.
Biden has promised that when Congress returns, he'll press for action on his infrastructure agenda that includes proposals to make coastal areas more resilient. The new Texas law that effectively bans most abortions in the state could backfire on Republicans. Bloomberg's Amy Morris reports from Washington.
The new law caught the eye of Florida Republicans, who are now openly considering whether they could pass something similar. And it's become an issue in the Virginia governor's race. But the far-right positioning of abortion laws could also alienate college-educated suburban voters, a group that Republicans need to take back the House in next year's midterm elections. It's a voting bloc that had stuck with Republicans because of economic issues. In Washington, I'm Amy Morris, Bloomberg Radio.
The Biden administration has unveiled a $65 billion plan to prepare for future pandemic threats, likening the ambitious proposal to the Apollo mission to the moon. The proposal announced today by the White House Office of Science, Technology, and Policy, as well as the National Security Council, focuses on protecting the U.S. against potentially catastrophic biological threats, including those that are naturally occurring, accidental, or deliberately set in motion by bad actors. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Katie, you buy any NFTs yet?
No, I don't know if we're allowed to.
You have 0 NFTs?
0 NFTs.
Yeah, you're right.
Sure.
We're probably not allowed to buy NFTs, but perhaps that's a good thing because, not that I have $500K to spend on a rock with laser eyes. Sorry, did I say rock with laser eyes? I meant a digital representation of a rock with laser eyes.
That is a distinction actually with importance because we're talking about non-fungible tokens. What may just look like JPEGs, actually, it helps you verify that you actually are the sole owner of this image, which I guess is really important to some people.
It is, and it's also becoming a $550 million asset. The frenzy for digital artwork is breaking new ground as one of the internet's best-known memes gets turned into a near $550 million asset overnight. It's called the dog coin.
Not to be confused with Dogecoin.
Woof, woof.
Oh, gosh. It is actually a fraction of the NFT that depicts the famous Doge meme that created or was the inspiration behind Dogecoin. But this is actually, it's Dogcoin. It's a fraction of the NFT of the meme.
A fraction of the NFT of the meme?
Yes.
Did I get that right?
I believe so.
So if you're saying to yourself, I don't necessarily think Dogecoin is going anywhere, but maybe a fraction of an NFT of the meme.
This meme is super hot. Got to get part of it. I guess that would
That's for you.
That's the investment base case.
$550 million asset overnight. You and I talked NFTs on Quick Take Stock earlier today.
We did, and I borrowed a point from Bloomberg opinion columnist Jared Dillian, and I think it was an important one. That
Always a great read.
NFTs, they actually do a lot of important things in terms of property rights, but if you look at the NFT market right now, where sales are super, super hot and just booming, it's just pure speculation at this point. It's forgotten that original important purpose, and maybe it'll get back there.
Let's talk some numbers because the market is pretty big. 17 billion NFTs in existence, I should say. Each dog coin worth about 3 cents, and about 1/5 are in circulation. 55% are owned by the original buyer. This is Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A jobs Friday and a move lower for the S&P 500 index. Little change, down 1 point today, down less than 0.1%. The Dow drops 74 points, down 0.2%, down 0.2, while Nasdaq climbed to another record, up 32 points, up 0.2%, bringing its year-to-date gain now to 19.2%. To put that in context, the S&P this year up by 20.7%. 10-year down 11/30 seconds. 10-year yield 1.32%. Gold up 1% today, rallying $18 the ounce to $18.28. And West Texas Nvidia crude oil fell 1%, down 72 cents a barrel, 69.27. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, for the past 30 years, IBM has been the technology partner at the U.S. Open. The company is responsible for the hybrid cloud strategy. It develops, it manages, and it hosts the U.S. Open digital platforms and more. This year, though, there are some new innovations from IBM, like IBM Power Rankings with Watson and Match Insights with Watson at the 2021 U.S. Open. There's nobody better to talk about it with us than John Kent, Program Manager for IBM Sports and Entertainment, joining us from the U.S. Open. John, usually this time of year we are there, but this year is a little different as last year was, so we are not broadcasting from the U.S. Open. How is it there?
Well, it's almost normal. I mean, it's very good to be back. It's very good to be able to have some of our clients back here, and it's good to see fans in the stands. And sorry that you guys aren't able to make it. I know they tried to limit personnel to essential personnel only.
Well, hopefully next year we can make it happen. In the meantime, I want to get an update from you and from IBM about what exactly you're doing using the IBM Cloud Platform in order to enhance the experience for fans who are actually at the U.S. Open, but fans who are trying to experience it who may not be there.
Sure. You know, the USC is a business, and they've often referred to these 2 weeks as their biggest fundraiser of the year. And digital platforms are critically important, and that's what we've managed over the last 25, 30 years since the inception of kind of websites. So, how do you engage more fans more deeply? Well, there's so much action going on, especially in the early rounds. So we came up with this idea about IBM Power Rankings. If you look at a player's tour rank, that's a 52-week kind of rolling sort of average. But really what matters is how are you playing coming into the U.S. Open? What's your recent performance? What's the momentum that you have? So we use some advanced analytics to measure, players' win velocity and their win margin. We also marry that up with what's the media saying about them? What's the commentary? So what's the volume of that conversation? What's the sentiment? And then use some machine learning algorithms to, kind of rank the players. And that allows us to do a couple things. One, identify ones to watch. And that would be a player whose, tour rank is significantly different from the power rank. But it also gives us the ability to offer a prediction, if you will, for every men's and women's singles match, which just adds a little bit more excitement to the tournament and allows fans to, navigate who they want to follow a little easier.
Hey, John, how's it holding up right now?
It's holding up extremely well. Like the likelihood to win, as a matter of fact, yesterday there were 14 matches on the show courts, and Watson got 13 of them correct. So that's not too bad batting average.
And so can you tell me how the IBM Cloud works in with these new features? How does that work?
Sure. Well, the cloud has always been critically important to the U.S. Open for serving up the experience, and that had been its primary focus.
I like the pun.
Yeah, I didn't even intend it. But what really makes it faster now is the fact that we use a combination of on-prem, which are systems that are here. We've got private clouds, public clouds, same as our clients. But with open architecture and being able to write the applications in containers and then leverage Red Hat OpenShift, you can run that application on any cloud, anywhere, any vendor as well. And we obviously prefer IBM. So that gives you a tremendous ability to innovate much more quickly, much more rapidly, and it allows for kind of a systems a consistent management of the entire infrastructure.
I'm wondering from a business perspective how this partnership over so many years has worked out. I mean, how do you think about quantifying whether or not what you showcase at the U.S. Open is worth the work that you put into it, and it actually does find its way from a marketing perspective into communicating what you can do at IBM for other companies?
Yeah, I mean, first and foremost, we get feedback from our client, the USTA, and we have some metrics with them about how we're able to drive their business a little bit further. And then just being able to use this platform to talk to people like yourselves and get our message out there. But really, what this is it's a showcase of what we're not of what is not possible, but what we're doing. And that's probably the most important thing. Is like we have this technology; it's great, but the technology is an action to help clients, and the same technology can help other businesses in other ways. So the natural language processing that we utilize for the match insights and the power rankings, that's the same natural language processing that we use to help a pharmaceutical company, kind of navigate their help desk, if you will, and end up responding to a lot of calls, if you will, via chat, and standing something like that up in 2 weeks and addressing 10 million calls. So it's really about showing the art of what's possible to our clients and demonstrating it's real stuff.
Hey, John, I'd like to end with a question about the distant future. As somebody who thinks about this stuff on a day-to-day basis, I'm curious what's not yet possible, but what you envision could be possible. If we're talking a decade from now, what can the IBM Cloud do?
Well, I think the IBM Cloud will be able to do anything that's possible in a few years. I mean, if you look at quantum computing, that is sort of in its infancy, but IBM's made some great strides. That is going to allow a lot more processing and solving a lot more larger problems of today's society, be it cancer or even working on kind of climate change.
John, you got a favorite player that you're rooting for?
Ons Jabeur on the women's side. We've been following her since the Wimbledon, because our system has picked her out as a ones to watch. Very exciting player from Tunisia, and so yes, there. And Matteo Berrettini on the men's side. Again, same thing, identified by our Watson and tracking pretty well. So we're excited to watch those players.
Very cool. John Kent, Program Manager at IBM Sports and Entertainment, joining us from Flushing, New York, where he is at this year's U.S. Open. We are going to talk more about the U.S. Open in just a few minutes. Joining us is going to be John Wertheim, Executive Editor and Senior Writer at Sports Illustrated, also a contributing correspondent for 60 Minutes. He's also the author of Glory Days, the Summer of 1984, and the 90 Days That Changed Sports and Culture Forever. This is Bloomberg Business Week, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Grafeld live in the Bloomberg Interactive Broker Studio. Katie, any other year, you and I would be doing this broadcast live from the U.S. Open. I know.
Gosh.
But, well, I should say any other year apart from this year and last year.
Right.
Hopefully next year we can do it. Yeah, we'll have to wait and see. But we are sticking with our U.S. Open theme for the rest of the show. John Wertheim, you know him from Sports Illustrated, from 60 Minutes, from the Tennis Channel, and from his new book, Glory Days. He'll be joining us to give us what to watch for at this year's U.S. Open as we get into day 5. In the meantime, let's get a check on what's happening in the world of business news with Charlie Pellet.
Thank you very much. Turned out to be a mixed Friday. Record for NASDAQ. The long-awaited jobs report triggered small moves in the equity market, with investors weighing whether a sharp slowdown in hiring would make the Federal Reserve delay a reduction in economic stimulus. At Wells Fargo Asset Management, Brian Jacobson, senior investment strategist, told us right here on Bloomberg Business Week you cannot call it a bad report.
It's still a good number. It's not great, right? Going from great to good doesn't have to be bad.
And Priya Misra is global head of rate strategy at TD Securities. She was calling for a weak jobs report. As for where it leaves the Federal Reserve,
we think tapering is still very much on the table, but we're calling for a December taper, not a September taper. I mean, November is possible if the next couple of reports are very strong, but later this year they taper, and then we see inflation next year. We don't think they're hiking well until the end of 2023.
10-year down 11/30 seconds. 10-year yield 1.32%. S&P retreating from a record, down 1 point. Little change. Key takeaway: light volume ahead of a long holiday weekend for a lot of people. The Dow down 74, down 0.2%. Nasdaq a record, up 32 points, higher by 0.2%. Now for the week, Nasdaq was up 1.55%. The S&P up this week by 0.6%. The Dow this week had a loss of 0.2%. Gold up 1%, 18.28 the ounce. West Texas Intermediate crude oil today down 1.1%, 69.25 a barrel. Apple is delaying the rollout of a system to scan iPhones for images of child sex abuse after it raised fierce criticism from privacy advocates that it could open the door for other forms of tracking. And the blog Electric says Tesla's Cybertruck pickup has fallen about a year behind schedule. Tesla shares up today by 0.2%. Recapping S&P down a point today, little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Rafael Nadal, Serena Williams, Venus Williams, some of the biggest names in tennis, well, they are not at this year's U.S. Open. So 5 days in, who are the favorites? And why are so many of the players going unvaccinated? After all, fans have to show proof of at least one shot in order to get in and watch it. Well, joining us to talk about all things U.S. Open and more is John Wertheim, executive editor and senior writer at Sports Illustrated, also a contributing correspondent for 60 Minutes. He's also the author of the new book, Glory Days, the Summer of 1984 and the 90 Days That Changed Sports and Culture Forever. He's right now covering the U.S. Open for the Tennis Channel from Los Angeles. John, it's great to have you back on Bloomberg Business Week Radio. I think the big difference this year that I want to ask you about, among many other things, is that you're not actually covering it from New York. You're not at the U.S. Open this year. You're in L.A. How's that going?
It's a little strange. I'll be back for the end, perhaps to see Novak Djokovic pull off this Grand Slam. But yeah, I mean, this is kind of the new way of the world, and I think I think we're all kind of wondering what life is going to be like post-COVID, and whether we all go back to offices, telecommute, and certainly media and sports media is no different.
Well, I've been to the U.S. Open a few times. It's one of my favorite events to go to each and every year as a New Yorker. But of course, I haven't been for the last couple of years. Take us into what exactly is happening for fans right now, because it is at 100% capacity for fans. Masks are optional. And although fans have to get vaccinated or at least show proof of getting one vaccine, many of the players are not vaccinated.
Yeah, and that's been an interesting. I mean, it's sort of laid bare tennis and governance, and I mean, as far as the fan experience, it's been great. I mean, obviously, this is all complying with New York protocol, but Last year there were no fans. This year, full boat. It's interesting when the roofs close and this turns into an indoor event. The masks come out, but so far from all accounts, this feels like a normal U.S. Open.
What?
And sorry, go ahead.
Why, John, do you think so many of the players are going unvaccinated? And this has been a story. This is not just about the U.S. Open. This has been throughout the return to tennis.
Yeah, it's a great question. And I mean, look, I think some of this is a function of the workforce. It's global. I mean, people come from countries where they have different attitudes about vaccination. I mean, to me, it's terribly disappointing. It's baffling. I mean, if any athletes should be getting vaccinated, it's these tennis players who are on planes. They're traveling around the world.
Yeah.
I mean, just from a standpoint of if you are vaccinated and you have contact with someone that tests positive and you are vaccinated, you're okay. If you're not vaccinated and have tracing contact with someone who tests positive, you're out of the tournament. So even for the most selfish professional reasons, I mean, even completely sort of abnegating your responsibility as a human being, just for strictly professional reasons, it's crazy not to. I mean, I've heard all sorts of explanations. Some of the players have had it already. Some of them think, well, what if I get the vaccine and my arm hurts so much I can't swing a racket? I think it's a lot of sort of misinformation and disinformation. I think it's a real insight into tennis players. And in an individual sport, we often talk about how you have to be selfish and it's sort of you have to put yourself first. And in a weird way, this is an expression of it. I mean, there's no union. I mean, in other team sports, there's an employer, there's an employee, there's a union. You can mandate vaccines, or you can make it very difficult for the unvaccinated. In tennis, all these players are individual contractors. They make their own decisions. And as you said at the top, it's bizarre to me that hundreds of thousands of fans are going to come through the gates and they all need to show a card. And yet the athletes they have come to cheer, 50% of the time, they're unvaccinated. It's not a good look, and it's definitely a contradiction.
And John, just quickly, from the players that you're talking to, I mean, what is the hesitation? Is it, like you mentioned, concerns about arm pain, or is there some kind of mistrust of the vaccine?
I mean, it really breaks down, and some of it is geographic. Some of it is the arm pain, which, again, I'd rather have arm pain than get COVID.
Yeah.
Some of it is just, some of the players have had it already. There was, it's a sore spot in tennis, but, Novak Djokovic in 2020 held an event where everybody was unmasked, and a lot of the players got COVID from that. Apparently they think they can't get it again. I mean, the other thing I've heard is, one player said, I'm paraphrasing, but not by much, that he's young, he can handle it, and it might even be a good thing because it'll teach people of his generation persistence and overcoming adversity. So,
wow.
The ATP, to their credit,
right,
they've tried to impress upon tennis players to get vaccinated, but it's it's not great.
John, sit tight because we're going to come do some news and we're going to come right back to you. That's John Wortham, executive editor and senior writer at Sports Illustrated. We're talking all things U.S. Open. Let's get a check of the latest with world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. President Biden is putting a positive spin on today's jobs report, which showed smaller than expected growth.
The president said the economic recovery is durable and strong.
Well, I know some wanted to see a larger number today, and so did I. What we've seen this year is a continued growth, month after month, adding jobs, an economy and a job market that can weather the ups and downs of the Delta variant and anything else that comes our way.
The resurgent pandemic slowed hiring, and the president said he would intensify the effort to get more Americans vaccinated. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is in New Orleans this afternoon, seeing for himself the damage wrought by Hurricane Ida. He's not the only leader fanning out to check on those impacted by the storm. This morning, New Jersey Governor Phil Murphy stopped by the town of Millburn.
It's quite clear our state and our nation does not have the infrastructure to meet this moment and to meet the future as it relates to these storms, which are more frequent and more intense.
Murphy confirms they've seen at least 24 deaths from the storm. Senate Democrats are discussing a wider range of tax proposals than President Biden has proposed, including levies on executive compensation. Former U.S. Treasury Secretary Larry Summers backs that move.
I do think that there are abuses in ways in which executives are paid that enable them to escape taxes, to a substantial extent.
You can hear the full interview with Summers on Wall Street Week at 6 p.m. tonight, Wall Street time, on Bloomberg Radio. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Well, let's talk a little bit about what we experienced here in New York City. We are talking to John Wertheim, executive editor and senior writer at Sports Illustrated. He's talking to us about the U.S. Open, and even earlier this week when the rain started and came down, even though the roof was on Arthur Ashe Stadium, rain still came in sideways into and disrupting the event. It speaks to the historic storm that we had earlier this week. And among the most read on the Bloomberg terminal has to do with New York City is going to start alerting basement dwellers after flood deaths. New York Mayor Bill de Blasio said the city is going to draft new policies to warn New Yorkers who live in basement apartments of impending rainstorms after the death this week when floods ravaged the region. Katie, at least 40 people died in New York and New Jersey in that heavy flash flooding that came in the wake of Hurricane Ida. Many of those who died in the city, they were trapped, Katie, in basement apartments that rapidly filled with water during the storm.
Yeah, it's known that 5 of the 6 below-ground residences where people died had been illegally converted too. So there's some questions about that there. But we do know that the city will now try to alert basement dwellers before the storm happens. They already do that for coastal residents. Hadn't been doing that with basement dwellers. And we know that there's at least 50,000 basement apartments in New York City, housing at least 100,000 people. So that's a lot of humans.
It is. The city is going to use mobile phone alerts, send first responders door to door, and work with community organizations to reach them. That's according to the mayor. New York City also confronting a new normal for weather after flooding from Hurricane Ida. As Ida's deadly waters receded and emergency crews raced to return power and transportation services, stunned residents of New York, New Jersey, and other parts of the Northeast. They faced up to the vulnerability to new weather storms. I got to tell you, I was one of the people who experienced flooding in our building. And, you know, I talked to people who lived there for years, and they say we have never seen anything like this before. This is Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The next Friday, NASDAQ at a record. The S&P declined, lower, little change, down 1 point ahead of a long holiday weekend. The Dow dropped 74 points today, down 0.2%. S&P down less than 0.1%. NASDAQ up 32, higher by 0.2. Again, a record there. The NASDAQ 100 index up 0.3. Russell 2000 down 0.5%. Dow Transports declined by 1.1%. S&P 500 little changed after much weaker than expected jobs data had traders weighing concern about the economic recovery against receding bets on a faster taper by the Federal Reserve. 10-year yield 1.32%. Gold up $18 the ounce. Spot gold up 1% to $18.27 the ounce. And West Texas Intermediate crude down 1.1%, $69.19 a barrel. Lyft Inc. says it will fully cover legal fees for any of its drivers sued under Texas's new law that outlaws most abortions in the state. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to John Wertheim, executive editor and senior writer at Sports Illustrated, also contributing correspondent for 60 Minutes. He's covering the U.S. Open for the Tennis Channel, but he's doing that from Los Angeles, at least for right now. John, as you told us, you were hoping to make it back here to New York to see the tournament wrap up. Let's talk about who you're watching this year. I said that there were some big names that aren't there, not even playing. Nadal, Serena Williams, Venus Williams. Who are you watching?
I mean, I think we're watching sort of macro. This is we're getting a glimpse into the post-Federer, Serena, Nadal world. And what is this sport going to look like? Who are going to be the stars when these stars we've had for, more than 20 years?
Yeah, decades. It's been a decades-long era.
It's been phenomenal. This is the first U.S. Open since 1996. So, first term Clinton. Since the mid 90s that we haven't had a Williams sister Federer Nadal in the draw. So this has been very different. But the big story is Novak Djokovic going for the Grand Slam. This is tennis's sort of holy grail. It's 400 hitter. Hasn't been done on the men's side since Rod Laver more than 50 years ago, and he won the first three legs and his first two matches here. So five matches away from this historic achievement.
Australian Open, French Open, Wimbledon, and of course the U.S. Open would make it a Grand Slam. Do you think he can pull it off?
I do, and I think that his approach is really fascinating. I mean, Serena Williams 6 years ago won the first three legs and was, quite reasonably, understandably nervous, and I think a lot of the attention and the focus and the speculation really got to her. And Novak Djokovic is more than happy to talk about it, more than, he sort of understands the challenge and is really leaned in, as we say. It's really sort of his approach has been very interesting, and he has, five more rounds to go and is not insignificant, but I think he gets it.
Okay, John, let's back up a little bit and say I am only very tangentially aware of tennis. Maybe I only know who Serena Williams is. Maybe that's all true. Why aren't we seeing the big stars come out and show up at the U.S. Open? What's going on there?
You mean the big culture stars or the big sort of tennis stars?
The big tennis stars.
Oh, well, I mean, Serena Williams turns 40 in a few weeks. Roger Federer is 40 years old. Rafa Nadal is 35, but his body is probably considerably older. We've really sort of had this embarrassment of riches, and we've had these extended careers. So, it's, you name a player from the past. Steffi Graf didn't win after she turned 30. John McEnroe didn't win a major after he turned 25. Wow. So the fact that these guys are still competitive, 40 years of it's Tom Brady, it's LeBron James. This is the trend across sports, but time eventually wins, and right now it's winning with Serena, Federer, and Nadal.
Well, let's talk about that next generation that you referenced. Who specifically are you watching?
Well, I think sort of Djokovic is its own sort of subcategory, but I think a lot of young players are coming to the fore. One of them is out of the tournament already, but is a terrific player, is Coco Gauff.
Yeah.
17-year-old from Florida. Naomi Osaka is an intriguing figure in many ways. As we speak, there is an 18-year-old Spaniard Carlos Alcaraz trying to get to the third round. The last time an 18-year-old went this far, it was Pete Sampras. So that is a significant achievement for Alcaraz. I mean, I think Federer, Nadal, Djokovic, Serena, those four players have commanded so much spotlight. There's something almost sort of, perversely refreshing about other players coming to the fore, just because those four stars have sort of hogged all the oxygen for 20 years, and now we're really getting to see how broad the cast really is.
It has been amazing in recent years to see some of those new players actually compete against people who they grew up watching, right? That just speaks to how long this old guard of tennis, or the current guard of tennis, has really been in there. Hey, I want to talk a little bit about 1984 and glory days, the summer of 1984, your book, The 90 Days That Changed Sports and Culture Forever, because there is a lot of mention of tennis. You mentioned John McEnroe already, but I want to talk specifically about Martina Navratilova and the rivalry that she had, and why 1984 was such a pivotal year and an important year for her.
Martina Navratilova, I think she's getting her due, but at the time did not get her due. And she was such a trailblazer. She's number one in the world, and she is openly gay. And she's talking about her trans coach, Renee Richards, and she's talking about why athletes don't use their platform to express their views on social causes, and why don't they train harder or even use data to scout opponents. And she was sort of, in a lot of cases, she was very much an outsider. Her foil was Chris Evert, who was sort of portrayed as the sweet and soft blonde Floridian, and Martina was sort of the harsh immigrant. And 1984, Martina Navratilova actually, she just dominated women's tennis, but she also really emerged as this cultural political force, and it was against considerable resistance. She didn't much care. And we talk about athletes that have aged well, and you look at what we expect of athletes now, physically as social leaders in terms of fitness. We talk about where we are on LGBTQ issues. Martina Navratilova was really sort of remarkably ahead of her time, and she had a fair amount of backlash and resistance in 1984, but a true pioneer, a true trailblazer, and history has very much agreed with her.
And what about on the men's side? We just have about a minute and a half left, but you mentioned John McEnroe. And again, the reason you wrote a book that had to do with the summer of 1984 is because so much happened. I mean, we're talking McEnroe, we're talking Lendl, we're talking Bjorn Borg, Jimmy Connors. Take us through the rivalry that summer. Yeah,
this was sort of peak McEnroe that summer. And apart from the tennis itself, you had, this small company called Nike was starting to make inroads, and we had more ways to watch all sports, tennis included, on this new cable network, ESPN, that more and more people were getting. This was really sort of a pivotal summer in terms of sports entering the realm of media and technology, and really sort of turning the corner from passion and diversion into big business. And I also think this was really, in many ways, the peak of tennis in the U.S. I mean, tennis thrives as this global sport, but there aren't as many top American players as there were then. And, in terms of tennis in America, I think 1984 may have, sort of marked a high water point.
John Wertheim, we are going to have to leave it there. It is such a pleasure to speak with you. John Wertheim is executive editor and senior writer at Sports Illustrated, contributing correspondent for 60 Minutes. He's covering the U.S. Open for the Tennis Channel. He's also the author of what we were just talking about, Glory Days, the summer of 1984 and the 90 days that changed sports and culture forever. Well, that is going to do it for Bloomberg Business Week on this Friday, September 3rd. Have a great weekend, everyone. Katie Greifeld, it was so awesome to get to anchor with you.
Let's do it again.
Let's do it again next week.
Okay, done.
All right, sounds good. This is Bloomberg Radio.